Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday the 17th of November 2021 and we're producing our Wednesday morning gold and silver price update, forecast and daily news. US retail sales were even higher than anticipated, and this has driven the dollar index to 96 and put pressure on gold and silver prices. Let's take a look. Welcome to Illuminati Silver. It's Wednesday the 17th of November 2021 at 09:42 in the morning. The weather today, optimistic. Yes, with the exception of a few fluffy clouds, the sky is relatively clear, and we can see the sun currently hiding behind the clouds, attempting to break out. So there is some optimism for some decent weather. But there's very little optimism on the inflation front. As we can see by the main headlines this morning, UBS, DBS top executives warn that high inflation may stay. We can also see further down here, UK inflation surges to highest in a decade on energy costs. Let's take a look at some of these. The heads of two global banks predicted an uncertain time ahead for the world economy as inflation rises and persists. The world may see uncomfortably high rates of inflation for 1 to 3 years, according to UBS Group Chairman Axel Weber, said at the Bloomberg New Economy Forum in Singapore Wednesday. Inflation is getting a lot more structural, DBS Group Holdings Limited Chief Executive Officer Piyush Gupta said at the event. Some of these points were echoed by another heavyweight in the financial world. Let's remember inflation is at a 31-year high, at least the data that came out of the US, and it's clearly going to remain high for the foreseeable future, John Studzinski, Managing Director and Vice Chairman of PIMCO, said. There will be a period of time where inflation is going to be very volatile. And on the UK, which has announced some figures, UK inflation climbed faster than expected to the highest in a decade, heaping pressure on the Bank of England to raise interest rates and tightening a squeeze on living standards for households. Consumer prices rose 4.2% from a year ago in October, driven by energy prices and the impact of broad-based supply shortages across the country or the economy. That was the fastest pace since November 2011, and up sharply from 3.1% in September. Economists and the Bank of England had expected 3.9%. This is then repeated by Reuters. UK CPI hits 4.2 versus the forecast of 3.9, highest consumer price inflation since 2011, Bank of England to consider rate hike next month, and producer price inflation hits highest in 10 years. What's also interesting in the news, moving away slightly from inflation for just a moment, Amazon will stop accepting Visa credit cards issued in the United Kingdom. Why? Some customers were told of changes this week after making purchases. They received a notification from Amazon saying that starting the 19th of January 2022, we will no longer accept Visa credit cards issued in the United Kingdom due to the high fees charged by Visa to process transactions. So Visa's inflation charges may be a thing of the past. They're going to have to change or lose out on huge sums of business. And then, just to give us even more bad news, the European Central Bank warns of market exuberance as the economy recovers from the pandemic. Increasingly stretched prices in property and financial markets, risk-taking by non-banks and elevating borrowing pose a threat to euro area stability, the ECB warned. While the economic recovery from the coronavirus crisis means near-term risks have dissipated, vulnerabilities are accumulating, with potentially grave consequences down the line. Not much optimism there. is there? And if we look at the BBC, again, they're focusing on UK prices soaring at the fastest rate for 10 years. Some good news, though, for those who work at Lidl's, which is one of our cheapest supermarkets. It's to become UK's highest paying supermarket, increasing its minimum pay level to £10.10 an hour from March next year. But some optimistic news: UK announces plan to boost overseas trade. But on the downside, Japan export growth hit by supply chain crisis. Remember, we were talking about that a lot in the past 2 weeks. US and Canada. Deadly storm cuts transport links around Vancouver. US Congress to punish lawmaker over violent clip, and heated protests outside court ahead of Rittenhouse verdict. So much on the financial news in the BBC headlines for America today. It's mostly political. Amazon to pay $500,000 for not sharing COVID data. However, let's look at the dollar. Currently at 95.9. It's actually hit 96.24 today. In our video yesterday, when it was standing at 95, roughly 95.5, we said 96 is the next target and it will hit it. Well, it did. A little faster even than we thought. It hit it within 24 hours. Where's it going from here? Well, it'll settle a little because we now have to wait for the next piece of economic news to drive it higher. But as we've said, for many, many months, ignore those telling you the dollar's going to crash. It's rising in comparison with other currencies. What effect has this had on energy prices? Well, it's pushed them down. $0.75 for WTI crude or 66 cents for Brent crude. Equity markets, in spite of all of this, did quite well yesterday. Broadly up between 0.15% for the Dow Jones to as high as 0.76% for the Nasdaq. In the overall scheme of things, it's not a massive increase, to be fair, but it's still in positive territory. Asia Pacific overnight, slightly the opposite, actually down between 0.25 and 0.6%. And UK and Europe, a little bit of a mixed bag. UK down 0.29% and Europe just trading marginally in positive territory. Now, yesterday, what's caused the effect on the dollar, and we'll have a look on gold and silver prices, retail sales. We said yesterday's figures would be the most profound, and out they have come. October retail sales 1.7%. Compare that to September of 0.8. It's over double. Expectations were 1.5. This is even a greater rise against expectations. Retail sales excluding automobiles. Again 1.7% compared with expectations of 1%. Perhaps on the downside for the US, import price index 1.2% higher than expectations of 1%. But industrial production has certainly outsmarted all forecasters, coming in for October at 1.6% compared with expectations of 0.8% and compared with September's figures of minus 1.3%. And even the NAHB Home Builders Index is up in November to 83 compared with 80. So this news has made it more likely that the Fed will be more aggressive on its tapering, but perhaps more importantly, will be earlier in raising interest rates, and especially if we find that other countries such as the UK raises their rates, and the fear at the moment here is that we will in December. We're still not fully committed to that yet, but each day that passes, that prospect increases. Well, gold took a little bit of a hit yesterday and over the last 24 hours, down $13.95 at $18.59. Now, when you consider that its lowest this week so far, or today rather, has been $18.49, it's above that, but it's also below 1877. Silver prices almost identical to gold in that they too have fallen 12 cents to 25.09. There might be some pressure on that $25 psychological support level. Now, we don't see the dollar increasing much more rapidly in the next couple of days, because if we go back to the economic data, what we have today really is building permits and housing starts. However, we have a number of Fed governors and presidents speaking. So the market may take some direction from what is said by these individuals. And then tomorrow we have the jobless claims, which is where perhaps to a large degree more focus and attention will be directed. Cryptocurrency markets, Bitcoin taking a further hit, down another 2% over the last 24 hours, and is now currently trading at $59,176. If you bear in mind that within the last 48 hours, it was, I think off the top of my head, as high as $69,000. So it's come down huge percentage. However, the overall crypto market is still holding above $2.5 trillion. So, where do we see gold and silver from here? We think it's going to be a little bit under pressure, but we're not going to see significant moves unless even more data is published. But we are going to listen to what the Fed chairs and presidents and governors have to say during the course of the day. What do you think? Please do share your thoughts. Thank you so much for listening. Give us a thumbs up, subscribe, press the bell sign. Have a really great and confident, optimistic day. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.